In this video, we talk about the different type of mortgages. What are they and how do you qualify? That's starting right now.
Welcome to Home Buyers School, brought to you by Brookfield Residential.
Hi everyone, I'm Carl and welcome to another Home Buyer School video, a channel where you get the latest strategies, tactics, and tips from home buying experts. And remember, this is your first time on this channel and you want to get the latest strategies from the experts, hit the subscription button below, hit the little notification bell so you don't miss anything. So today I'm joined by Mushtaba Sayed, mortgage specialist with the Bank of Montreal, and the question we're going to answer today is, what are the different type of mortgages in Canada?
That's a good question, Carl. So the type of mortgages that we have in Canada are insured. There are two different types, insured and conventional. So what insured means is that it's actually default insured. So like you've probably heard of CMHC, Genworth, Canada Guarantee. These are the default insurance providers here in Canada.
So let's just stop there. What is CMHC? What does that mean?
Sure, absolutely. So CMHC is a Crown corporation. It means the Canadian Mortgage Housing Corporation. And they are part of the government, but kind of a little separate, but they are a Crown corporation. They provide default insurance, just like Genworth does and Canada Guarantee. So default insurance, what it is, it kind of protects the banks from default. So prior to CMHC being around, the banks were not really giving mortgages that easily unless you had 20% down. So the government kind of set up CMHC to be like, let's help more people get into homes a lot sooner. So now you can get into a home with as little as 5% down, as long as you have default insurance. So the way it works is, God forbid, you fall into a mishap, something's happened, and you can't pay that mortgage, the mortgage or the home goes into foreclosure, the banks are covered through default insurance. So that is what insurance is. The pros and cons to have insurance is, one, it's an easier approval process. The banks feel a lot more comfortable. Since they're a lot more comfortable, the banks will actually give you a better rate because they feel like they have less risk associated with that. So the funny thing is, the less you put down, if you have 20% compared to an insured mortgage of 5%, you actually get a better rate, but you do still have to pay for the insurance. So sit down with your lender, sit down with your specialist to find out what the benefit is. Is it benefit to go with the insured to get a lower rate, or is it better to put the 20% down if you have it and save on the default insurance? That's something, a conversation to have with your lender. The second type of mortgage that we have is considered conventional, so which is just the opposite, where you're putting more than 20% down, you have 20% equity in your home, and you don't need any default insurance. It is just a mortgage between you and your lender. Rates tend to be slightly a little bit higher because of the fact that it's not insured. So what banks have to do now, they have to price it accordingly because they might have to go and get insurance privately through a third party, whatever it might be. So rates usually are higher. I get that question a lot from my clients asking me, I'm putting more down, should I not be getting a better rate? Mm-hmm. Traditionally, that is the understanding, but the rules changed about a year and a half ago, called the B20 mortgage rules, where it was kind of put into place where banks would now start having to insure their own mortgages. So because of that, cost has actually gone up. So that was the conventional mortgages, but one of the benefits of conventional mortgage is you don't have to pay for default insurance. That could be a potential savings of couple thousands of dollars. And you can own, and the other potential benefit is you can take your amortization on a conventional mortgage up to 30 years. So if you have a 20% down payment and you're really interested in having a lower payment every month, you can only do that with a conventional. You can take it to 30 years, while with an insured mortgage, your amortization is maximum at 25 years. And unfortunately, you can't go more than that.
Are the payment plans different from a conventional to an insured mortgage?
So the way the repayment works is exactly the same. So they both are different. They're the same type of, they're both mortgages. It's just that now the rate might be different, and then your amortization might be different, and it might not be insured, but the repayment is going to work the same way. You can have weekly, bi-weekly, monthly, semi-monthly payments, and it gets paid down the same amount.
Cool. So Mo, with an insured mortgage, you will technically have higher payments because you have to pay for the insurance on top of your monthly mortgage payments, right?
Mm-hmm. Technically, traditionally, yes, but the amount is over the life of the loan, which is 25 years, is very negligible. So it's barely noticeable, right? So for example, if you're buying a house and the insurance premium is around $11,000, that's $11,000 over 25 years. That could be a couple dollars a month, right? So you won't really notice it. So It really just depends on the size of your mortgage, what the insurance premium is, and then yes, so it definitely have to be repayable for sure. Your payments would technically be higher than a conventional, but not enough for you to lose sleep over or notice, to be honest.
Do you have anything else to add?
I think we've kind of gone over a lot of information. If you have any questions about that, please reach out to us. There was a lot of material we did go over recently. So just let us know what your questions are, and we'll be more than happy to get back to you guys.
Perfect. And the question of the day I have for you is, what type of mortgage have you used in the past, insured or conventional? And what was your experience? Let us know in the description below. And remember, if you enjoyed this video and found it helpful, make sure to like, share, and comment, as well as subscribe. Thank you, and we'll catch you next time.
That's another edition of Homebuyer School. Tune in next time for more expert tips and tricks. And visit homebuyersschool.ca to bring you one step closer to finding your dream home. As with everything, it would be great if you like and share our videos. Also, please let us know if you have any home buying questions you want us to answer.